The Morgan Report with David Morgan.
David Morgan of themorganreport.com, the week ending January 21st, 2022. Well, just a quick reminder, our YouTube channel is still up. However, I'm not sure how much longer. So we do have the Morgan Report on Odyssey and I think another couple of channels. But the best way to keep appraised if things continue to deteriorate as far as freedom of speech, be sure you're on our free email list. All you need to do is give us a first name and your primary email. And then when you hit this join our free e-letter, you'll get an autoresponder. I'll say some kind words and you just verify that you want it. Of course, you can quit at any time. The next best place to go, of course, is the blog tab, which is here, which puts up most of our interviews that are done in the public domain. Our YouTube channel is here. Twitter feed is here. LinkedIn is here. And Facebook really doesn't count. There's really nothing on there. Twitter feed, if you're really interested in what I call Web 1.0, and those days are long gone, but I used to get up very, very dark mornings, very early, and I would scan all the news, huge economic news, and anything pertaining to precious metals that was worthy. And I would myself post it on the front page of my website. You can still see what a Web 1.0 website looks like. This is what I would call stevequayle.com, and this is an example of a Web 1.0. So if you scroll through some of the ads here, what it is it's a bunch of posts here. Steve probably does this himself, or maybe his webmaster. I really don't know. And it's news items, basically, that pertain to his overall theme of what he covers, which is a great deal. And so this is what I used to do. That's how my site used to look. And it hasn't for years because we're in Web 2.0 and moving to Web 3.0. So I said all that to say this. If you really want to know the news items that I would be posting if I still had this type of website, it's on Twitter. Twitter is where I post links to articles that are pertinent to mostly the economy and precious metals, but I can veer off into the health situation and other things I think are very valuable and worth your time to dive into deeper. So if you're more inclined to follow what I have been thinking on a daily basis, Twitter is the place to go. So before I get to the precious metals, let's just talk about the overall stock market for a while. There is a negative divergence on the SPX, the S&P 500. The SPX, of course, is a ETF that follows large caps. And we're seeing the strength of the stock market is deteriorating. It's fallen under the 200-day moving average, moving toward the next average. The NASDAQ not looking a lot better. It's breached them both and is bouncing off the lower. Small caps are also showing weakness. And the energy tech sector is what's leading. Of course, there's lots of issues surrounding energy that I've talked about on and off, not in every video, but one of the main components to the real economy. And of course, we always have our eyes on the bond yields, particularly the 10-year Treasury yield. And what we realize here is that it's something we really have to pay attention to because, as I've said many times, the bond market is the keys to the kingdom. If the debt markets or credit markets really falter and there's, let's say, an accident in that sector, then you are going to have the entire financial structure in question. And will it happen? My guess is yes, it will. Will it be devastating? No, but it will be significant enough to, let's say, revalue a lot of not only the debt that's out there, but probably the valuation of stock markets around the world, precious metals, cryptocurrencies, the housing market. Everything's basically tied to interest rates. What's the value of money? What's the cost of money? And the cost of money has not been in line with the free market for a very long time. When that realigns, we will see a huge shift in a lot of prices. So we had some great movement in both the gold and silver markets this week. You're looking here at Kitco charts. It's easy for me to pull it up. And you're looking here just above 1800 roughly. And then the 1, 2, 3, 4, 4, 5 trading days were up around 1840. And this has broken this near-term level of 1830. And gold is looking strong. Will it continue? I put out a premium members, paid members update last night. And my take right now is no. The volume was good, but not great, not significant enough to move it a lot higher. Of course, markets know more than anyone, certainly than yours truly. That's based on what I can see for absolute. The idea, though, is that the volume was above average, and it's not only volume, which is very key. It's also on what the supply dynamics are. So, in other words, if you could have above average volume and a very tight supply, that would be more significant than extremely high volume, but a huge supply, because the supply would be able to feed into a large volume, whereas a tight supply and above average volume may actually have more impetus to move the prices higher. So I want to give that caveat. And silver has moved rather well. You can see in the 5 trading sessions, it's been up about $1 or so. And if you go back just, let's say half of this scale here, 30 days, couple weeks or so, we've gone basically from $22.50 to $24.50, or a $2 move. So rather significant percentage-wise in silver in a rather short period of time. Again, repeating, I think that the volume is significant, but not significant enough. But I also must remind us that the tightness in the market has certainly been there all year. Last year, basically the premiums on metal for silver, extremely high relative to the norm. And it has spilled over into the wholesale market, meaning that commercial bars actually have a premium on them now. So that actually is a pretty good indicator that there is a tightness in the market from wholesale all the way through retail. So I want to spend the rest of the time a little bit on the what I've done here on my own website. Did another interview with Daniela Cambone. Thank you, Daniela. Talked about the video that went viral. The only one I've ever had that got 1.4 million views is one I did from my car with Daniela some time ago about the bail-in scenario. I just got contacted by a journalistic outfit in the United Kingdom, and they're putting this in place. Maybe we'll be into law here fairly soon, and they want to do an interview that basically is bail-in scenario for the United Kingdom, which I'll be doing here in the next few days. Starting a new series here. It's called the Silver PSYOP. So that means psychological operation. And I started with Dave Kranzler. I follow Dave fairly regularly. Not every word he says. I don't have time, but I like him and I like what he has to say. He's a no-nonsense guy. And so I chose him from Investment Research Dynamics to basically have a discussion with. Not necessarily because he agrees with me. In fact, he actually went somewhat deeper than myself as far as just how much you must question the custodians for anyone that stores precious metals. And let me digress here for a moment and go back and talk about where you can get more information on this. And that is in our book, The Silver Manifesto. If you really want to know more about fractional reserve bullion banking, buy this book. Unfortunately, I cannot send it everywhere because of the restrictions due to the authorities. So sending this book to Australia, New Zealand, and the UK, I basically can't do it. So unfortunately, it's pretty much locked into North America. But this book is a work of love, and it certainly does tell you a lot more detail what I can do in a quick video. But bought 1,000 of them, and I still have at least 500 left, and I've given out several, and I don't mind doing that. But if you're interested in a lot of stuff that I talk about and you want more information, this is the book to buy. So in a short summary, stocks down, metals up, cryptos are falling off. If you haven't started watching the Crypto Conspiracy series, I suggest you maybe hit 1, 2, 3, 4 and look at 14. And we will continue with that, starting to slow down, which I'm actually happy about. It's been quite a bit of effort, but I'm happy to do it. And then this silver PSYOP will continue on this. So going back to precious metal storage considerations, first statement, of course, is they're not all alike, and they're not. And the main thing here, which 99% of people don't do, is to read the agreement. You have to look for clauses that are one-sided and benefit the facility of the program. And this applies to cryptocurrencies that are gold and silver backed as well. Read it, and it's not a storage agreement, so read the agreement and look for clauses that are one-sided and benefit the program. You'd be surprised if you read them all. Anyway, many contracts are designed by attorneys who are paid by the custodian to protect the custodian's interests. Okay? And I mean, that's kind of common sense. You're going to hire a lawyer and you want to protect your interests, but there's a way to protect interests, and there's a way to basically make it so advantageous to the custodian that the other side of the contract has no rights whatsoever, and it's in contract. And if you sign it, what are you doing to yourself? So another basic: make sure that it's fully insured. Some are bonded but don't have insurance. Be aware that bond is not insurance. A bond is limited in scope and does not cover some of the risks. Reduce any conflicts of interest. Some facilities are owned or associated with precious metals dealers. This could cause conflicts if the dealer is unable to secure metal as promised for new or previously paid transactions for their clients. The ability to use existing metal in a vault rather than defaulting on a transaction has been a concern in the precious metals markets dating back to the goldsmiths of medieval times. All right, think about that. Understand the insurance limits and deductibles in the vault, what it's responsible for. It may be much more common than we think for facilities around the world to underinsure their total exposure of items being stored. The probability is low that everything in the vault would be stolen or damaged in one setting. However, as we have witnessed, natural or geopolitical events may cause unusual circumstances that place the owners of metals and vaulting facilities at much greater risk than they realize. So you want to be fully insured. Another cost-saving measure for storage facilities is to have high deductibles on their insurance policy or their bond. If the facility experiences a large loss or a number of small losses, having an insurance deductible set too high may affect the cash flow of that facility and lead to a going concern risk. If the facility is part of a bank, let me pause. If the facility is part of a bank, the bank may be insuring a bulk of the metal internally with the bank's assets. As we have seen in this volatile financial system, banks are constantly under pressure with their leveraged balance sheets and fractional reserve liquidity. All right, talk with the facility and understand their viewpoint with regards to political and social policies. How accessible would the facility be if unfortunate events occurred in the country where the metal is stored? Examples, riots, natural disasters, other things you can think of. The facility has not thoroughly developed its views or policies to deal with these. Precious metal owners may be stuck in a situation of complete frustration or inability. Again, one of the most critical elements of owning precious metals is you can't touch it, you don't own it, and if you must store, and I do, some, then you've got to be very careful with who you store it with. As a paid member of the Morgan Report, one of the first things I do in how to use the Morgan Report, and basically the intro package that you receive, or is on the website, I should say, is if you're going to be, if you have a large quantity and you are storing, you might just check with me briefly to see where it's at and if what my thoughts are on that. I don't want to put out anything more than what I just read you in the public domain. So I'll leave it at that. It's David Morgan from themorganreport.com.